news that's coming in from the FMCG sector, because the sector delivered a largely decent first quarter, with most staple companies reporting in line or better than expected numbers. And that really sort of does not include ITC. So barring ITC, in fact, revenue growth was in double digits for all staple players except ITC, which saw revenue decline nearly 14%. Now, price hikes remain a common theme across the sector. My colleague Snehi Shah is joining in with a roundup of the earnings season of the quarter gone by for the FMCG sector. Snehi, what have been the key takeaways given the fact that there have been price hikes, they have remained the common theme, but barring this, what are some of the key highlights?
Absolutely. It's been a decent quarter for FMCG in the first quarter gone by. In a nutshell, mostly inline set of numbers coming in for the staple companies, barring ITC when it comes to revenue growth. Outperformers this quarter have been Nestle and Marico, a beat versus the consensus estimates across the board for both of these companies. On the flip side, we've seen underperformance coming in from ITC as well as HUL. Remember, this is the first full quarter of that cigarette tax hike impact that ITC was reeling under, and that's the reason why ITC was under pressure this time. We've seen double-digit revenue growth coming in for all staple companies barring ITC. Margin expansion has been seen across the board for all staple companies barring HUL, Godrej Consumer and ITC of course. And mixed volume growth trends have been seen this time around, but a surprise beat on the volume front has been seen from Tata Consumer as well as Marico. And lastly, price hikes have been a common thread across companies this time around, given the kind of raw material inflation that we've seen on account of the war in terms of crude, palm oil prices as well as packaging costs. Now let me take you through a company-wise breakdown of what these staples companies have done. For HUL, it's been a mixed to weak quarter this time around. 10% revenue growth in line with what the street was estimating, volume growth of 5% versus an estimate of 6%. Margins over here, we've seen a contraction of 40 bips at 22.7%, a miss versus street estimates. Talking about Nestle, beat versus estimates, very healthy revenue growth of 25%. They don't report volume growth, but brokerages are estimating mid-teens volume growth this time around, and we've seen a margin expansion of 250 bips this time. Mixed set of numbers coming in for Britannia and Tata Consumer was largely in line. 8.2% revenue growth for Britannia, 12% revenue growth for Tata Consumer. While Britannia doesn't report its volume numbers, brokerage believes this number is around 9%, and Tata Consumer on the volume front has been really strong this time. 13% volume growth versus an estimate of 8 to 9%. Both these companies have seen margin expansion of 40 and 80 bips respectively. Moving on then, inline set of numbers coming in from both Godrej Consumer as well as Dabur. Their volume growth has been good. Godrej Consumer has surprised on the volume front. Dabur has been more or less decent at 5%. While Godrej Consumer has seen a contraction of margins of about 48 bips, Dabur has seen an expansion of close to 300 bips, so looking very healthy for Dabur's margins. Now let's talk about Marico. A beat this time around across all fronts, 23% revenue growth, 11% volume growth looking good, and an expansion of 36 bips in their margin. And now, however, let's put the spotlight on ITC. It's been a weak quarter this time around on account of those tax hikes. Weak quarter coming in, negative growth for revenue, a degrowth of 14.5%. Cigarette volumes came in around 5%. The street was estimating this to be as low as a 10% cut over there. And cigarette volumes were lower by just 5%. So positive over there, while there has been a degrowth and there has been a contraction in their margins too. Now taking a look at what the volume trend has been, you've seen a good 13% uptick versus estimates of 8 to 9%. For Tata Consumer, Marico has done well. HUL has done slightly softly compared to a 6% estimate. Dabur more or less in line. ITC, of course, slightly under pressure. Now let's take you through what the management commentary has been. HUL has seen its highest growth in 13 years. They say FMCG demand will continue to be stable. They've maintained their margin guidance at 22.5 to 23.5%. Nestle has risked El Nino linked risks. Britannia is confident of looking at a good year. They've been able to mitigate half of the price inflation. For Tata Consumer, they have reiterated double-digit revenue growth target and margin expansion of 50 to 70 bips. They're aiming for mid to high single-digit growth in the tea business as well. For Godrej Consumers, they say they've taken price hikes of about 5% across their portfolio. They hope to not take any more price hikes, and they're looking at high single-digit volume growth for FY27. Quickly talking about Dabur, they expect double-digit consolidated growth for full year FY27. Marico sees mid-single-digit volume growth for rest of FY27 and extremely confident of meeting that 15,000 crore top-line target that they've given. And ITC And remember, while this was the first full quarter, we are still awaiting some commentary, some indication on what the outlook is going ahead, because they have taken price hikes, but that has not been to the tune of the tax hike. So that, in a nutshell, is the kind of performance that we've seen coming in from Q1 FMCG staple companies.